Okay, so let's continue on here. Sorry, I only have 10-minute video lengths. So, gauging your trades to see if it's a good trade or not. There are some useful things. I've noticed the VWAP is a pretty good one. Let's take yesterday, for example. Price opened up on camera, the CPR. Well, really hard to tell which way it's going to go, right? Because you just got to wait until it breaks out one way or another. And the VWAP, with volume weighted average price included in the Camarilla, it flips to green just before most of the move happens. And you'll notice the next day, oh, it looks like we have a pivot retracement to be had, but it doesn't quite get to H3. So if you want to, trade to a magnet or to a developed pivot before it gets to that new H3, in case you think it's not going to get there, you could use the VWAP. Noticed it flipped red, and then it just made its way down. Right now it's trading right there, right on the new pivot. Right, so the VWAP is pretty useful. Here we have a break away from the CPR, flipped just to get to the H3, H4. Similar situation. The VWAP is pretty good confirmation. Here we have the price opened up on the CPR, flipped, and broke up to the H5. Pretty good stuff. Anyway, so the VWAP can be quite useful for those situations where you need a little bit of an extra, an extra confirmation when you don't have price exactly on a clear H3 or L3 setup right as the day begins. Let's say you're on the CPR and you want to know which way it's going to trade, whether it's break up or break down, or if it's in the middle and you think it's going to go to the new CPR before it makes one of those levels. The VWAP's a good confirmation. Now, avoiding some bad trades and also confirming some good trades. Here we have the daily linear regression channel. Now, you'll see here, this is another reason you could have known, well, along with the VWAP, maybe it won't get to the H3 before we get our magnet. Because look, it's already on the top of a channel that's been pretty respected for quite some time. Same with this one here, right? Same with, this one was pretty close, right? So this is just kind of an extra envelope along with the pivots that helps you to gauge and judge the situation. You can see from the trades, the threes, and the trending CPR, it fits pretty well. Another thing you could use for confirming a trade is, we have the oscillator that we put together. The oscillator. Awesome, right? So you'll notice here in this situation, I'm not even going to change any of the settings or anything. So here, let's remove some drawings. And you're going to want to try to get in trades, around New York Open, or especially after the, daily open, because that's the pivots, the setups are especially, opportunistic at these times. So here we have, so let's say today we had, we had a little bit of a oversold, caution dots setup. We knew it was primed to have, it fits the bill for retracing to its magnet. And then we had some extra confirmation, the shaft trend channel, cross down, and then boom. And now it's starting to float green. So now we're probably going to wait to see, are we going to break out of this? So here we're waiting to see if we get to the next daily pivot first, or we go down to that weekly first. What might happen is the price breaks up, it's near today's H3 or the next H3, and then goes to the weekly level. And that is one thing. So when you have when you have in the midweek, you're playing the daily levels and you don't know if it's a good trade to take the L3 to the H3, H3 to L3, or to go the levels 4 to the breakout levels 5 and 6. So what you can do, what I like to do anyway, let's see, we're over here, and gonna hold this down. All right, and I'm going to turn off this. Don't really need it here. All right. Okay, so let's say this is the middle of the week, right? And it seems we had a bit of downside day instead of a breakout day. Let's see, that was on the 12th, 13th. How could we have known that? Well, so let's say, okay, do we really want to take this long here? Right? I mean, it did go up another ladder, but you do generally to avoid the higher risk trades. You notice it's getting a little bit tired over here. One way you can do it is you can open up, say, another chart on the weekly levels and see where you are in the span of things in this time. So let's say that was 12 on the 12th. Yeah. You were pretty much, yeah, that was around this area. So you had just broken over H4 weekly. So the weekly was starting a breakout at the same time as it was hitting support around here. So yeah, actually that would have been a good trade because technically that level being held here was essentially confirmed by the H4 being retested on the weekly breakout levels, and then it went to the H5. So I guess that's a good example from another perspective. If you were trading a swing trade like a weekly, it broke over the H5. It broke over the H4, right? You usually want to get in on the retest, right? Retest of H4 before you target the H5. So that's the breakout trade over here, right? And you can confirm and even take another trade, let's say on the daily levels, right? But there's some confluence there. So that pivot magnet that you saw coming on the daily, you knew it was going to trade at this point. And you also knew that this point was pretty important to hold. You could have taken this magnet trade while also taking this weekly swing trade. And then, if your daily trade, you get that scalp in, but then if the level breaks down, like it started to, you would have insurance from your swing trade over here. Because if you're wrong on this one, it's a steeper margin of error. You have a stop loss at H3 that's, a couple thousand. But if you are right on this one and then you hold this one and you could just move your stop just over the CPR, you'll break out in profit from this magnet scalp and you'll still have your swing trade from the H4 to the H5. And likewise, if this trade fails as it breaks down, hits your H3, your stop, you're also still going to be holding this daily magnet trade as it makes its way down to the breakdown levels. So your two trades and the different levels, while they can confirm each other, like the H4 to the H5, the continued daily uptrend of the CPR, they can also be insurance, against each other, right? So sometimes trading the different levels can be a little tricky. It helps to have a couple different places to trade, a couple different exchanges. Anyway, that's the second video. And next one we'll do a walkthrough.